Hello everybody, this is Toni Turner and welcome to the market now as of Friday, August 2nd at about 2:20 p.m. Eastern. Well, U.S. stocks are tumbling to a one-month low today after a sharp escalation in U.S.-China trade tensions, and a tepid July jobs report is renewing fears of slowing economic growth and raised bets of further interest rate cuts this year. And on that note, that cheerful note, let's go ahead and look at three charts that could help us kind of figure out what may come in the coming week. Now, our first chart, as always, is a chart of the S&P 500 spider, symbol SPY. This is the tracking stock that closely follows our S&P 500 index. Now, the last all-time closing high, and we were making a bunch of new all-time closing highs here in the last couple of months. The last one came in on July 26th. All-time closing high then was $302.01. That takes us over 3,000 on the S&P 500 itself. Now, as you can see, right after that happened on July 26th, the market took a down move here, pulled back. Quite honestly, we're probably pretty much due for a little pullback here. Now when I'm capturing this chart today, the SPY is trading at $292.01, just at the 50-day moving average, which is the green line, coming in here at 292.45. We'll talk about that more in a minute. As we can see here, we talked last week a little bit about the 14-day RSI. That's a momentum indicator. We noted that the 14-day RSI here, it moved up to its overbought line but not above it, and made a lower high here in the last couple of weeks of July, as opposed to the higher high it made earlier in July, while at the same time the SPY was making a higher high. So whenever you see an indicator make a lower high while the price itself is making a higher high, it's called a bearish divergence. And we noted last week that we should keep this information at our elbow, is what I like to say, so that I kind of know it happened. And maybe that keeps me a little more cautious. Maybe I keep my mittens off the keyboard a little more when that happens. So we were due, and we got the news, and we got the drop, and the news about the additional potential tariffs on China. And so that's what's happened in the last couple of days. Now, as far as the 50-day moving average goes, this line is considered to be by many institutional traders as kind of a short or medium-term trend line. And they don't like it very much. It's kind of a negative when price falls below and, more importantly, closes below the 50-day moving average. It's coming in right now at $292.42, just a few cents above where price is right now. If we see three closes below the 50-day moving average on the SPY, and obviously if the SPY continues lower while it's doing that, that could be a negative, and it could send the SPY closer down, maybe stretching down toward the 200-day moving average, which is coming in right now at $278 so far and 68 cents. Now, we do have plenty of price support here, right around 290. More price support at 289, more price support here at 280, 281, and again the 200-day moving average, which is a much longer term moving average, coming in at $278.68, or about $27.86 on the S&P 500 itself. So while we are having a pullback here, and sometimes August can typically be kind of an ornery month in the market, we'll have to keep an eye on it, keep an eye on the 50-day moving average in relationship to where price goes, maybe get a little more conservative here. If we see if the market starts to bounce, that's a good thing, or if people are taking off maybe more time in August. So we'll have to become a little more conservative. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this ETF represents the NASDAQ 100. We keep an eye on this for a lot of reasons. One reason is the QQQ really the top stocks in it are some of the big momentum stocks that tend to push the market around. And we're talking stocks like Apple, Microsoft, Amazon, Facebook, Alphabet, and so forth. So this is an important index, the NASDAQ 100, in our stock market. Now today when I captured this chart, the QQQ was trading at its 50-day moving average as well at $186.48. And the moving average itself was trading at 186.64, this green line you see. So the Qs were sitting just on or just barely under its 50-day moving average. Again, an important line in technical analysis for whatever asset it's on or it's applied to. Now the QQQ made a new all-time closing high up here on July 26 at 195.29. So we do have price support here, down here just where the just below the 50-day moving average at about 185. There's more price support here down at 182, 183, and of course down at the 200-day moving average, the black line at $175.62. I do have a trend line, this blue line drawn here, and of course that could be more support coming in here about 176, 177. So plenty of potential support here should the Qs find a need to fall a little lower. And of course we'll have resistance back up here at the all-time highs, right around 195, 196. So if you feel like getting a little more defensive this summer, maybe for the month of August, now we're going to look at a chart of the iShares U.S. Real Estate ETF, the IYR. The IYR has 114 holdings. The top holdings are American Tower, Crown Castle International, Prologis, Simon Property Group, they have a lot of malls, and Equinix. Now this is not on this chart, I just looked it up, so I'm telling you about it. The IYR made an all-time high, because, you know, remember real estate, remember how hard it all fell during our last bear market. The IYR made an all-time high in February of 2007 at about $95. It fell to a low in March of 2009. The IYR did to $20.98. Wouldn't you say that's quite a drop? Now, since then, if you look at a longer term chart, you'll see this, except for a few quick drops and a couple of hiccups, it has moved back up to its current price, again, where we're capturing this chart today, at $89.72. And actually in July of this year, it moved a little higher than that. Now, with the Fed lowering interest rates, investors may turn to REITs, real estate investment trusts, and that's what's in the IYR, and to add maybe some capital gains and maybe to add a bit of stability in this very volatile market. Right now it certainly is. So real estate is not usually the big star of the market, but along with utilities, it starts looking pretty good when the market's moving lower. So if the IYR stays above its coming day, its 50-day moving average, in the coming week, I might add a small position of this to my portfolio. It has a dandy dividend. If it can break above its July high up here, its July high, and that's at about $91, I may add additional shares at that time. So right now, you can see that the IYR is trading at $89.72. If it can edge its way higher and, of course, stay above the green line, the 50-day moving average, if it can start to look positive here and break above, say, 90 and keep going a little better, I'll probably add shares to my portfolio. If it moves up and over the highs here at 91, the current highs, I may add additional shares to my portfolio. Now my initial stop, is going to be a close below $87, and then if the IYR climbs above 91, I will tighten my stop to a close below the 50-day moving average, so I'll be tightening it up to here. And then if the IYR continues to climb, I will turn my stop into a tighter trailing stop. So with that said, you may want to keep an eye on the IYR in the coming week. And now on to the next week's economic reports. But first, I want to alert you to an exciting opportunity. We're having a flash sale for my popular online training, How to Bottom Fish Like a Pro. Now we're offering this training right now at a 20% discount for a few days only. And that's because with the market selling off the past couple of days, there are a whole host of high-quality stocks that are now ripe for the picking. With this training, you will quickly discover easily and quickly how to spot the stocks that have sold off and are ready to reverse higher, giving you profits maybe 20, 30, 40% of more. Plus, many of you will be able to pay for this low price training with your first trade. And now on to the next week's economic reports. Monday we have the ISM non-manufacturing index. Tuesday, not much going on economic report-wise, I should say. Wednesday we have our usual crude inventories. Thursday we have our usual jobless claims and natural gas inventories. And on Friday we'll have the PPI, the Producer Price Index. Again, you're going to want to check out our flash sale for How to Bottom Fish Like a Pro. We are going to give you a special 20% discount that is available right now and only for a few days. You're going to learn how to buy low and sell high, a simple and effective approach to the market that can earn you more money from now on. So click on the button below and check it out. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.